And staying on with Venezuela, its main revenue source now faces fresh turmoil as the latest U.S. action brings exports to a standstill. PDVSA, the state-run oil company, is cutting production and it is shutting down oil fields as storage fills up. Despite the turmoil, global oil prices, they remain steady, cushioned by ample supplies elsewhere. More in this next report. Take a look.
Venezuela's state-run oil company, PDVSA, has begun cutting crude production. The company is running out of storage capacity due to an ongoing U.S. oil blockade. PDVSA's move includes shutting down oil fields or well clusters as onshore stocks mount. Caracas is in a political crisis under an interim government after President Nicolas Maduro and his wife were captured by U.S. forces on Saturday. Oil exports, Venezuela's main source of revenue, are now at a standstill following a U.S. blockade on tankers under sanctions and a seizure of 2 crude cargoes last month. Shipments by U.S. giant Chevron bound for the United States had been an exception, as the company has a license from Washington, but weekend data shows that even those have now stopped. U.S. President Donald Trump said Saturday that an oil embargo on the country was in full force. Venezuela's oil minister, Delcy Rodriguez, who is now the country's interim president, said last month that the country would continue producing and exporting crude despite the U.S. measures. But the U.S. pressure has forced PDVSA to store oil in vessels since late December and slow down cargo deliveries at its main port. If loaded tankers cannot depart, company executives and experts view more output cuts as unavoidable. Oil prices drifted lower Monday despite the turmoil, as adequate global supplies offset worries about disruption in Venezuela.